into the future of MSP work, Episode 2.
Slides, how are you?
Good, man. You?
Good. Where are you today?
I'm in Studio 6 here in Toronto, waiting for Swifty to get going, or actually more accurately, trying to avoid it. So yeah, it'll be mayhem here the next week, I would imagine.
How many shows is she doing in Toronto? Like 6 or something?
Yeah, 6. Yeah, pretty much the next week.
I wonder if Kelsey's going to be coming to the city.
Well, they play the Bills this weekend, right?
So he's close by.
So I think she probably, I'm not sure if she sings on Sunday. I'm not exactly, I actually don't know it, since I don't know any of her songs either. I don't think she's playing maybe on Sunday, so that's when the game is.
They're
playing my beloved Bills.
Something tells me you probably have tickets to the event. You just don't want to tell us. What have you been up to? I'm really excited about our conversation today. We have Joe Panettieri and joining us, so I think we're going to have a real great conversation with him. But I thought maybe before we would jump in, have you been paying attention to some of the things going on in the MSP world these days?
Yeah, I think when we kicked off the future of MSP work, our first session, I was actually in London, so that was kind of the start of really what's been a bit of a whirlwind, taking the future on the road, for lack of a better term. So yeah, went over to London, spent a bunch of time with David Weeks and actually some of the other MSPs over there, a couple of the Halo guys as well. So kind of checking out what's going on over in the UK and Europe. That then kind of went to and that market's obviously on fire, like EMEA, I think in comparison to North America, even there's bigger MSPs there. So definitely really looking forward to, hopefully getting to Berlin in April for Empower, and as we put together kind of our program with all of the different top-down companies to spend a little bit more time in definitely EMEA and Asia Pac as well, because those markets are obviously exploding. Yeah, and then kind of from there, we kind of took what our initial episode with Dan Wensley, which Dan did a phenomenal job. We actually brought that on the road to Whistler to kind of do almost like a college game day. Kind of felt like you interviewing two old quarterbacks talking about the game ahead kind of thing. And I think it definitely resonated pretty well for those folks that want to take a look at that. And then from there, top down, we actually closed our $25 million fund one. So we had a great event actually down in Las Vegas, bringing on again some of our limited partners, some of the big names in managed services, Adam Sluskin, David Bellini, Jason McGee, to name a few. So that was really good to connect with a bunch of I hate using the term legends. It's more kind of, definitely the people that have helped build the industry, and really look at that on a collaborative basis. And then I know you went to DattoCon in Miami, and Joel and I went over to IT Nation in Orlando. And I'm sure as we get Joe into the conversation later on, we can kind of dive into, what we're seeing, what's hot, what's not. Definitely there's a lot of products as you go into the pavilion that are features, right? I wouldn't really call them companies. So they're, particularly in kind of the cyber widget world, as I call it. So yeah, I mean, definitely a lot of exciting things going on in the space, some great young new companies that we're super excited about. So yeah, I mean, definitely been a busy couple of months here.
Yeah, I have to say that, the month of late September, October is really pretty much seems like 80% of the MSP events are taking place. So there's so much going on, and Yeah, I had the privilege to go down to DattoCon, and that was a really neat event, and just kind of like you, blown away by all these new companies that are popping up. All solutions for MSPs, whether it's AI or new ways on how to do things. It's pretty impressive, and really kind of articulates and explains why this market is doing so well and why it's so lucrative for so many different vendors. So really nice to see. And Datacom is at at the beautiful Fontainebleau, and
Your fave.
oh, my favorite. That's my favorite place. And our good old boys, Ken Patterson and George Bardizzi threw a really good party at Live nightclub. And I know that at IT Nation they actually had Flow Rider there, so that was pretty, and it looked like there's quite a few thousands of people. So
Nice.
I'm not sure. Did you have a chance to go to that?
No, I didn't actually. We were just super busy. In at IT Nation, we were kind of in and out, in a day and a half, 2 days. So had a ton of meetings with potential companies that we're looking at investing in. We're actually in the midst right now of investing in 3 security companies this quarter. So we have 1 done, 2 more to go. So stay tuned for that. So yeah, definitely was a super busy time, and obviously going around, going around talking to a bunch of folks in the trade show as well. So, but I mean, ConnectWise did a phenomenal job. I'm obviously a huge fan of Jason McGee, so definitely Manny has some pretty big shoes to fill there with Arnie, than Jason, but I'm sure Toma and company know what they're doing, definitely. So definitely look forward to, as you've always heard from me, I think we need big, super successful public companies in managed services. So definitely cheering for some of the big platform companies in that regard.
Very cool. Yeah, I mean, and even the announcement at DattoCon about, Kaseya buying SaaS experts. So congrats to Jim Libby and his team. So very well deserved. And just so many neat things going on in the space. So I think the timing is perfect to have Joe here today, because he's gonna, kind of have a different conversation, and just in terms of what's happening in the market and how he sees it, with all the new things, and his role and what he's doing in the market right now has changed over what he's been doing the last few years. So be great to catch up with him and bring everybody up to speed. And our next event that we're going to have, like our next webcast, is, you mentioned him a little bit earlier on, is the famous David Weeks. And I'm excited, great friend of ours, and it'll be interesting to have him on December 5th. So hopefully everybody can register for that one.
Yeah, I mean, I dropped in I dropped in as a comment on the invite for the thing for the session today. It really brought me back to with Joe coming on his podcast that he ran with John Pagliuca and the team at Enable, called Pinot with Pag and Panettieri. So
That's pretty
so I
cool.
went down to the fridge, and the only Pinot I could find, and I do like Pinot, is just in for the group on the call, cherry pie. Not exactly my favorite Pinot. I know you two Italian stallions know a lot more about wine than me. So, but here's a really good wine, actually. Cake Bread, which kind of one of their premium products, called Dancing Bear. So
That's nice.
it's not Pinot though. So it's more of, a lot of cab in it. So maybe we call this cash cab, but I think that's been taken already. But needless to say, it kind of takes me back, definitely, seeing Joe, and now Joe, as you said, is just in a much different area. I mean, he invests a lot in the space, with the Channel Angels group, and they and that's what's great about kind of this next wave of really people that kind of grew up in the MSP space, starting to invest, whether it's from an angel level or building a venture firm like we've done at Top Down. So yeah, I mean, definitely, Joe, this would be a really interesting conversation for sure.
Yeah, I think it would have been fun for Joe and I to compare pasta recipes and what mothers used to cook at, at like when coming home from school in the old days. But I think
Sure.
we'll kind of stick it to business. So, Mark, like we shared on our last webcast, the future of work and our analysis of the market and where we kind of see the industry going. And I know what Joel's going to talk about today really kind of relates to, you know, the change in the whole entire market and stuff like that. Like when you've been going to some of these events that, and the travels that you've been doing and all that kind of stuff, is this actually hitting home or are we a little bit off on this, or is it totally making sense now as you're going to see some of these new technologies and companies that are out there?
Yeah, I mean, I think I think it's kind of irrefutable that these are the categories, those first three categories kind of by decade, going back to the days when Arnie at ConnectWise and obviously us at Enable created the first RMM and PSA platforms and basically what was their MSPs doing, kind of cobbling together tools, what's up gold or whatever, kind of, I'm really dating myself now, some of the technologies back then and offering proactive service. There was a handful, but really the 2000s saw kind of the traditional managed IT and security space take off. As we talked about on the last episode, everybody thought we were all going out of business when Microsoft 365 came in 2011, but cloud just kind of supercharged the space over the 2010s decade. We see now, by the end of the decade, really, where we're starting to see marketplaces, and I know marketplaces, are a significant area where technology is going to be acquired and consumed as we're going forward. So obviously we have the Pax8 and Ingrams of the world. Cybersecurity, I think, has really breathed life the last 5 years into the managed services model to kind of almost as the hook for, value-added services, or if you invest as an MSSP in what it takes to actually deliver those types of services, you definitely have a differentiator out in your market. But needless to say, those three things, it's not like you have to go to law school or CPA school to proclaim that you're any of those things. I mean, I think that's the challenge on regulations and stuff within the industry, is basically pretty much every MSP on the planet says that they do those three things. We really see a new thing happening. I kind of call it data is the new oil, right? In the digital work world, and that's digital work analytics. So if you want to just kick to the next slide, and then we're going to turn it over to Joe. What we're really seeing, and that's how we at Top Down kind of look at where we're investing, what makes it, and even looking at the current platforms as well. So if you take a look at really hyper automation, the data that's collected by the RMM and PSA platforms is massive, right? So I mean, there's, we're seeing with the ASIO platform at ConnectWise, with obviously some of the things that organizations like ScalePad are doing, just the sheer amount of data gives us the capability to deliver, kind of this next wave of automation within the industry. We really look as well at vendor ecosystems. So that's what'll be cool about the conversation with David next month, as Enable's created something called the Ecoverse. And what we kind of see is there's kind of two roads that are being driven. You've got obviously ConnectWise, Kaseya, that are PSA RMM platforms and adding tools like SaaS alerts, as you just mentioned, into theirs as they go forward. We then see another group that I would coin more as best of breed. So the Ninjas of the world, the Enables, definitely Halo, to name three, And a lot of these organizations are starting to create, I wouldn't say a marketplace, that'd be a bit of a stretch, but definitely vendor ecosystems for interoperability within their within their platforms. Virtual AI agents are really seeing a lot of that right now in the enterprise, and I think you're going to see more and more of that in managed services as we go forward. So kind of bringing things out of the Flintstones and definitely making it a lot more automated as we go forward. On the next two, I'll just touch on them quickly. Cloud, so we're going to see these marketplace wars. I personally think marketplaces will be acquired by some of the platform companies as we go forward. So we've obviously seen Ingram go public recently. They've gone pretty much their whole IPO roadshow has been on their cloud, the Ingram cloud business, so which is a massive business. So I think there's back office cloud marketplace. There's also probably, I would say, for a lot of MSPs that are on the call right now, they've never heard of companies like Vendasta, excuse me, or Webware, two companies up in Canada. They offer kind of this soup to nuts, all in front office marketplace as well for channel partners. To some degree, App Direct is a little bit like that. So I think there's, again, a lot of things that we're going to see going down the pipe on the cloud side. Cyber, I think all of us are trying to de-risk the business more. The do-it-yourself model that worked so well for 20 years in managed services, that'll put you out of business in the security business pretty quick. So I mean, definitely seeing, kind of moving from widgets to more platformization. An investment that we're making in a company is, definitely trying to pull together a bunch of that equation in more of a platform as they go forward. And I know we see cyber warranty and some technologies in North America. I really view what's going on in Europe as what's going to come to North America with cyber plus insurance actually bundled. So we're going to see carriers really looking at, okay, we're going to send a questionnaire out to you. We don't like the technology stack that you're using. We want you to move to this kind of approved set of vendors in your security stack. Last but not least, as I said, data is the new oil. What we really see in the digital work world, this digital work analytics as being the next thing. I would say everything that's happened in managed services in the last 20 years, 25 years, has fit our tools that, whether it's security or just for IT operations, they fit under RMM or they fit under PSA. They're extensions to either of those technologies. We really look at digital work analytics as this new type of technology that's going to be able to collect all of the data and give a lot more insight for both users, both managers, and ultimately SMB business owners to really make better decisions based on data. So that's, I guess, in 1,000 words or less, kind of is what we see the future of work, both what's coming next in the three core areas and what's coming next as a new category in managed services as we go forward.
Awesome. Thanks for that recap, Mark. I think, I've been saying it for the longest time, is it's so critical for MSPs to differentiate themselves, and having a new category that allows them to do that is going to be imperative. It's only imperative, though, if the MSPs do decide to accept it and decide to make a change into the business. So thanks for sharing that information. Mr. Panettieri, how are you?
I'm doing awesome, guys. Thanks for having me. How are you guys doing?
Good. It's nice to have you here today. Love your background. Star Wars fan?
Yeah, original Star Wars fan, and I guess I'm one of those wounded Star Wars fans who keep hoping that Disney will get the portfolio back on track, but we'll see. But I grew up with Star Wars and definitely a fanatic of the original trilogy.
That's awesome. Well, listen, I'm really excited to have you here. I know we have strong attendance today. It's definitely not because of Mark and I. I think you really hold strong voice in this industry. And why don't you share with us a little bit what you're up to nowadays?
Yeah, absolutely. So I'll give you some background, but before we even
Yeah.
start, before we even start, I really want to start with a thank you. You guys have just been tremendous to me over the years in each stage of my career. And then you multiply that by all the MSPs and the vendors out there who are so kind to share their time and expertise with me over the past 15 plus years, give or take, in the MSP market. I definitely want to start with a thank you. I know I'm forever thank you. My former business partner, Amy Katz, who's doing great, is forever thank you. And our brands that live on and continue to grow and thrive, continue to appreciate their audiences. So, or I should say, our former brands. So,
Well,
for those who don't,
I'll tell you this though, before you go, is that I think every vendor in this industry actually deserves, a lot of credit and a thank you from you and what you've brought to the industry in the market, taking some of these smaller companies and making them noticeable, just in terms of like you. And from my perspective, you were the CNN of the MSP space, right? Like anybody in our space would log in the morning, they would go to your website, see what's going on, and you were totally up to date with all the new information, whether it was an acquisition or introducing a new company in the industry, or even showcasing MSPs and what they're doing and how they're being successful. So like you really are, I think, one of the main people that made the MSP space what it is today, and that was based on your platform. So thank you to you.
I appreciate it. I would close the sort of the chapter on that by saying I always felt like a sports writer who was watching the emergence of the NFL. Like I wasn't on the field, but I was covering everything going on in the field and the locker room, and I love that. But I mean, and to be clear, that's my entrepreneurial past. I'm forever thankful. As you can tell, I lost a lot of hair during that journey. Um,
Yeah.
the entrepreneurial present, what am I up to these days? I started an incubator, Mentori Ventures. And the whole idea there is to nurture the next generation of IT journalists and also the next generation of whatever the next wave is. And so how do you do that? I'm doing it in two ways. And then let's definitely open this up to Q&A. But the short story is Sustainable Tech Partner is covering energy and power management and sustainability in the IT services market, and it's growing like a weed. I'm really enjoying that conversation. And then Channel Angels, as you guys mentioned earlier in the program, is an angel investor group. And so for those who are like, well, what is Channel Angels versus like a top down, which is your venture firm and your venture fund? Channel Angels does not have a venture fund. We are just a group of accredited angel investors who come together pretty frequently to pull some money and invest in individual startups. Whereas you guys have put together a fund to really help people get into multiple companies at once, which I think is wonderful. And I see a lot of synergies in our work. Um, we're up to 30 investments so far, some great, two awful, and about 25 yet to play out. And we're really enjoying it. If people have questions about that, they can feel free to email me. But it's way enough about me. I'd really love to talk about trends in the market and answer any questions you guys may have.
Yeah, and with that being said, like for anybody on the lines, our lines are muted, but if you have a question for Joe or Mark or myself, you can just basically put the question in and we'll address those at the end. So yeah, why don't we go through this? Because you came to us and we had some discussions and you have a thesis that you want to kind of like propose and discuss today. So why don't we dive into that a little bit?
Okay, that sounds great. And this thesis, by the way, was written before the US presidential election and the outcome. So it remains unchanged, And I heard a great quote this morning on Bloomberg Radio. They were talking about, hey, don't let politics interfere with your view of how to run your business, And the market, generally speaking, goes up over the long term, regardless of who is president. So let's put aside the US presidential election for a minute. First, I'll start with some of the challenges in the market, and then we'll go through this thesis. The latest service leadership numbers are saying, hey, roughly 16% of MSPs are losing money. And I think it's about 25% overall are either break even or losing money. But nevertheless, I'm optimistic. And now we can go back to that other slide about why I'm optimistic. We've got these interest rate cuts, and I am not suggesting we're going back to 0%. But as these rates come down, it gets much easier for businesses of all sizes to make capital improvements and physical infrastructure improvements. And once you have that infrastructure in, there's an opportunity to put more and more recurring revenues in and around that. And it's also easier, by the way, to finance M&A deals. And that's both for the big platform vendors, as well as the small MSPs and all the PE firms running around. So, and I should also mention, I share these views from my experience as an angel investor over the last, I've been in the angel market maybe a decade, but really active over the last 5 years, and then full time over the last 2. I do think, guys, and I'd be interested in your view of this, for this reacceleration of the market to happen. I also think we need to go through some pruning and some pain. And what I mean by that is we need zombie companies to die. And a lot of them have been hanging around too long. So what is a zombie company? It's loosely defined as a company that fails to make enough money from their operations to pay even their interest on their loans, let alone everything else, right? And in the zero interest days, that wasn't a big deal because you could keep kicking the can down the road and growing your valuation and raise more money and keep funding the business, even if you were losing money. Now in the real interest days, you've got about 7,000 publicly traded companies worldwide that are zombie companies, and many of them deserve to die. And of those 7,000, 2,000 of them are here in the US. The thesis is you kill those zombie companies, let them go, please. And the net result could be all this talent either going to work for MSP software startups or investors who want to invest in those startups or the MSPs themselves. But I think we're on the verge of loosening up the talent pool in a big wave. I don't know if you guys agree or disagree with that part of the thesis.
Yeah, I mean, I totally agree with it. I think even beyond zombie companies, there's zombie VC firms out there as well. I mean, if you look at the amount of capital, just actually even the traditional early stage venture capital, I'm not talking about PE because I think the private equity guys have a pretty tried and tested model in terms of when they come in, what the goal is. They're typically obviously coming into more mature companies. We obviously benefit hugely from from that at both enable and fully managed through through my past experiences. Both of those private equity firms that came in made us a better company, better governance, connected us with again where we were going to end up in both cases as in terms of our exit strategy. I think the challenge in venture is there's venture firms that have got so big that they make more off their fees than they do on any successful exits. And
Yep.
they just throw a whole bunch of darts at the wall. They don't necessarily have domain expertise in kind of any area, although everybody's AI today, right? And so the result of that is it's really difficult for founder-led companies to make it through that. Typically the founder that's the CEO is going to be replaced and called some other title within the organization. So there's kind of that problem in the larger venture funds, but actually even a worse problem is what in terms of zombie is there's been a lot of startup venture capital firms over the last 5 years, kind of even through the pandemic, post-pandemic, and they've invested in the zombie companies. right?
Right.
Way overvalued,
Right.
to your point, right? So, and that was even the kind of the, that was the challenge when Joel and Chris and I were first going out with our kind of our story on the top-down founders fund, was to kind of say, no, we don't really fit in that category. We fit in the category of venture studio. We'll bring capital, we bring expertise. We're focused in one area, obviously the managed services domain, SaaS companies and technology companies within there. So I think the venture studio model, you're going to see it's grown already over the last 3 or 4 years in particular. And that's where you're going to see, again, smaller funds that spend more time with founders that obviously know what are some of the real challenges that are ahead in scaling that company from $1 million to 10 million ARR. What does 10 million to 30 to 50 to 100 look like, right? So that's unfortunately for a lot of these companies that you're mentioning, they don't have a ton of that expertise around the table. They have financial engineers for the most part.
Right. Yeah, so you guys, you were mentioning this, and you could stay on this slide for just a couple more minutes. I'll walk us through it a little bit more, but a few pieces of feedback, Mark, on what you just shared, and tying it together with events like DattoCon or IT Nation. Great events, no doubt. And I love to see the startups at those events, no doubt. I applaud anyone who's building a business, but I do think that the attendees, whether you're attending as a software company or as a service provider and you're seeing these new businesses, I do think you have to ask a few key questions. Mark, to your point earlier, are you a feature or a real product or a platform, number one? But also, when these startups are bragging about have venture backing or angel dollars behind them, is that strategic money, or to your point, was it a VC or an angel that just has so much money they had to throw it somewhere, but they know nothing about the pond or the lake of MSP software? And what I like about top down and what I enjoy about the angel investor journey with Channel Angels is I think of ourselves as strategic fish in a strategic pond or a strategic lake, rather than these big whales in an ocean of opportunity, but the whales don't really know anything about the particular nuances of each ocean. They're just throwing money at big opportunities, and you're not quite sure which one's going to hit. I'm not saying we've got a higher hit rate by any means, but I think we enjoy the journey more because we actually understand the business owners and what they're trying to build.
Bang on. Yeah.
So I do think as we see this churn of zombie companies die, we are finally seeing VCs and angels investing at more reasonable valuations. If you look at the most recent numbers, by the way, and this comes from PitchBook. Oh, I should have mentioned at the top of the program, if I throw around sources and you're not quite sure what was that source again for that information, email me or link in me, and I'll be sure to tell you what the source was. But in this particular one, it was PitchBook. Roughly 26% of funding rounds this year are down rounds or break-even rounds, which means that's the other thing that we all have to be aware of. When a company brags about getting money, it may not be at a good valuation for the company or the VC or the angel. You really got to understand what the valuation was. And I, for one, in many cases, welcome the down rounds because it means the company's becoming more efficient. It means that the company's focused on a path to profitability. And it's okay. It's not a terrible thing to do a down round, especially when you compare about the inflated valuations of like 2020 and 2021. The height of the market, we're just not going to go back to those multiples, I don't think, anytime soon, if ever.
Yep. Agreed.
Yep. The AI hype, I did want to touch on that one. So on the one hand, we do see some good AI and automation coming into the MSP software market, but I think it's a good thing if we start to see this AI hype calm down. And what I mean by that, let me give you a few sound bites on that as my dog tries to interfere with the podcast here. So just a few sound bites. OpenAI, Google, and Anthropic. If you look at those companies, all big names in AI, come here. Enzo wants to say hi.
There you go. I was going to say, you might as well bring him on.
Yeah, well, you mentioned pasta in Italy earlier. Enzo is named after the
Yeah,
baker.
a dog with an Italian name too. Good.
Yeah. Enzo's named after the Italian baker in The Godfather. My son named him. I was very proud that my son picked that name.
Very cool.
It's going out of control really fast, Joe.
Yeah. So, but for the AI stuff, if you look at OpenAI, Google, and Anthropic, there was a great story this morning. You know, we're recording this on November 14th. There was a great story this morning on Bloomberg. They're talking about the fact that these companies with unlimited resources are already struggling to develop more advanced models in AI. So it's already a challenge for the big guys. And you know, the other thing that worries me a little bit about the AI market in terms of reality check, you know, you think about me, I'm a small-time angel investor.
Yeah.
And yet I've had the opportunity, I passed, but I've had the opportunity in the last 6 months to invest in OpenAI and Anthropic multiple times, which says to me, like, it's that old line from Groucho Marx. He used to say, I wouldn't want to be part of a club that would let me in. Like, it's basically saying if insiders at OpenAI and Anthropic want to sell their shares to me right now, it means that even the insiders are feeling a little wary about the company and the business, and they've made so much money already on paper, they're desperate to cash out ahead of the IPO. So that's a little red flag there. The other thing I would mention, and then I'd love your feedback, is OpenAI amid all this hype, you know, they're going to do about 3.7 billion in revenue this year, but they're going to have a $5 billion loss. And, you know, everyone else is focused on a path to profitability. The AI companies are focused on growth. And I'm not saying AI won't be real. I know ChatGPT is absolutely real. I'm just saying we need to take a step back and calm down a bit. That's my take so far. You guys?
Yeah, like, you know what, Joe, I mean, it's apparent that it's becoming solutions and technologies that people can use in business today to streamline how they work. But, you know, I'm with you on this. Like when you think of like the valuations that you're seeing out there, and the difficulties, you know, of all these other startups trying to come into the market to try and take over, and everybody trying to throw money at it, it's tough, and it's going to be. I think you're going to see a lot of these zombie companies that you refer to. You're going to see a lot of companies go out of business. And we do see it as well in some of the things that we're working on, where a company was here and then 6 months later it's not there anymore. So it's really interesting to see kind of like where the industry and the market is going for sure.
Yeah, I mean, I think I kind of put AI into 3 buckets. There's obviously the consumer use cases, which we've seen, you know, some super opportunities there, Copilot, etc. There's the kind of you know, work, you know, help augment my work, right?
Right.
You know, give me an article. I want to write an article, a blog article on digital work analytics. Go out and get it as a starting point. Although I hate editing things, I'd sooner write things from scratch myself. But then the third category is really the hard use cases in B2B, like in business. And that's where we really see, back to digital work analytics, you need to actually have people understand how they use technology, the impacts on workflow improvements, have the company understand across their organization how technology is used to you know, inhibit people to some degree in terms of their productivity, among other things. And so I see a huge opportunity, you know, for managed AI for the MSP market as we go forward. But first you need to actually understand the data, the people, the process, to understand what are the top 3 use cases to do to do automation inside of an SMB business, right? And I think vertical AI, we're seeing a lot more success, you know, to that, you know, on that front than necessarily just kind of looking at it, you know, kind of the way you look at kind of some of the consumer use cases for AI. So there's definitely a lot of opportunity in managed services, but you need the data.
Yep. Yep. You need the data. And I'll build on what you said. So with this sort of the workflow opportunity, the staff automation opportunity, the other big opportunity I see is managed IT services extending into managed energy services. Now, what the hell do I mean by that? Gartner's estimating, and they could be wrong, but here's the stat. Gartner is estimating that 40% of data centers are going to face some sort of energy crunch, these AI data centers, by 2027. The stat that's thrown out all over the place comes from Goldman Sachs. And they say if you look like a Chat GPT query versus a Google query, a traditional one, a Chat GPT query that requires 10 times more energy than a Google search query. And you look at all these data center providers, and I'm not just talking about the big cloud scale providers. I'm talking about traditional hosting companies and other data center providers that are rolling out AI applications. They're struggling with their energy consumption. This is also going to hit on premises as AI computers, AI mobile phones, etc., consume more and more energy. I think the MSPs have a huge opportunity here to manage energy consumption and drive down energy costs for their customers. I just think that is a home run opportunity for MSPs out there right now in Europe, but in the US, probably within the next 2 to 5 years.
So Joe, can anything go wrong with this or what?
Yeah. So thank you for the perfect segue. It's really nice to have you guys asking the questions rather than me for a change.
Yeah.
I do worry a bit about this overspending on AI infrastructure. And you know what it reminds me of, guys, is the dot-com implosion, right? If we roll back to the year 2000 and 2001 and the whole dot-com bust, if you recall, in the late 1990s, what led up to that was the build out of the quote unquote information superhighway. Everyone was putting in fiber everywhere, right? And then all those hardware companies that provided the optical networking and the fiber, everyone went bust. Cisco went from the highest valuation company in the world, and their valuation plummeted for quite some time during this dot-com implosion. Fast forward to present day, where it's the same exact boom bust, I think at least, with all this AI infrastructure going in. At some point it goes bust, but at some point it comes back when we begin to see the SaaS applications and the AI automation applications you're talking about riding on top of all that AI native infrastructure from NVIDIA. But in the meantime, just a quick stat for you. The overspending on AI infrastructure, I shouldn't call it overspending, but the spending on AI infrastructure, NVIDIA's annual revenue for the 12 months ending in July 2024, it was $96 billion, up 194% from the previous year. That's an unbelievable growth rate for a titan in the industry. Do you really think that Amazon, Microsoft, and Google are going to continue spending at these rates on AI infrastructure? I don't know, but I'll be watching this closely. And I don't want to get into the presidential transition, but it's a variable here. War is always a variable, and then inflation ain't beat yet. We'll see if it comes roaring back. I don't think it will, but it could be a boom to bust if inflation hurts us here. So next up, let's see what else we got here in terms of some.
So I have a question for you. I have
yeah.
We talk whether it's geopolitical, wars, presidential elections, recessions, all of that kind of stuff. We've heard a lot of things over the years that the MSP space has always been insulated, recession proof and all that kind of stuff. Based on your data, was that actually the case? Were MSPs actually recession proof, or were a lot of them impacted?
Yeah, I forget. I wish I could give the right person credit for this term. I think it was John Pags over at Enable, but I think he used the term recession resilient, and I think that's the right type of term. And I'll give you one example, and I'll give you one concern. In 2008, during the early days of the MSP software market, when Wall Street went bust and we had the financial crisis in the United States, some of those early stage MSP software companies that were reaching their tipping points in terms of growth, whether it was ConnectWise, Enable, and others, those were challenging years there. Like it was
For
a bit of a
sure.
regroup that had to go on, right?
Yeah.
So I don't think we're recession proof in the MSP software market or the service provider market. That's part one. Part two, we've never seen a bust cycle where SaaS seats go away. If suddenly there's layoffs in corporate America, enterprise, mid market, and small, those SaaS licenses go away for number of seats used. Of course, MSP revenues are going to go down if they just have to. That's not saying it's going to happen. I'm just saying don't be surprised when a first time does happen.
Makes sense.
Yeah, I hope so. We'll see. In terms of, I put together some recommendations in two groups. First for the MSPs and then for the angels and the venture capitalists who joined the call today. And by the way, congratulations on sort of shaping the conversation for the angels and the VCs out there. It's something we try to do over at Channel Angels. But as you can tell, I have occasional distractions in life, including a dog. But the recommendations for MSPs, I would be really, really careful about what I call entrepreneurial arrogance in terms of what you think your business is worth versus what it's actually worth. Listen, I know during the height of M&A and zero interest rates, I know during that height, some really big MSPs were trading for like 18 times annual EBITDA or more. But those are dangerous stats for a small MSP to think they can even aspire to. Even aspiring to half of that valuation is a big, big number. And I think it's good to do a reality check on the market. And so how do you do that? I think you reach out to people like Abraham Garver over at Focus Investment Banking. Abe is tracking, and I should say Abraham, he goes by Abraham. Abraham's tracking about 106, give or take, private equity firms that are looking at MSPs. So he understands the real buy and sell process and the real valuations out there. So be careful of what you read in the media, including my many years old content in terms of what MSPs are worth, and go to the source like Abraham and others who really understand what's transacting here. So that would be a valuation reset in my mind. Also, adjusting your financial dials. Just a few quick stats. These come from Service Leadership. As I mentioned, 16% of MSPs losing money right now. But here's the good news. The average adjusted EBITDA for an MSP, according to Service Leadership, is roughly about 14% in Q2 of 2024. But if you go to the private equity-backed MSPs, it's ironic. Sometimes we poke and prod, and some people don't like private equity. I'd be careful to paint with broad brushes like that. Some private equity is great,
sure.
some's not so great. Some of it can be real great for your MSP. The average PE-backed MSP has an adjusted EBITDA of almost 19%, according to Service Leadership. So I think if you're adjusting your targets and thinking about that and growing your EBITDA margin 1 to 2% annually to either the market norms or ahead of a market norm, you'll do really well as a business. And the next stat comes from your target exit number. If you could go back one, guys, I'll finish up this slide quickly. I know we're tight on time, but your target exit number, this one comes from Arlen Sorensen and a peer group he does outside of ConnectWise. The peer group is known as S to S. That stands for success to significance. The members are typically former MSP owners who are trying to figure out what the hell to do with the rest of their life. And many of us are trying to figure out, well, how much money do we need to retire really and live comfortably? And the multiple that comes out of that, and it's based on third-party data that Arlen always talks about, is whatever you're spending annually, you basically need 25 times to 40 times that to retire, which can be an intimidating math problem that you need to figure out for your valuation gap, and also figuring out how to improve staff productivity and workflow automation to improve your EBITDA, to improve your multiple, to close your valuation gap. mean, those would be my 5 recommendations for MSPs overall. Anything that you look at here and you're like, Joe, you're way off, or hey, Joe, you forgot something?
No, I like it.
I wouldn't say that, like, I like, first of all, this is like amazing information, you know, for all the MSPs out there, because God knows, like, I've talked to a lot of them over the years, and everybody's trying to figure out at some point in time what's my exit strategy. So great information. Question I have for you though is it just as important? Like, is EBITDA just as important as an MSP that differentiates themselves in the market? And when I talk about that, and you know, like, we came from a world that fully managed, as an example, where we had different lines of business, from, you know, IT service management to a ServiceNow practice to enterprise level service desk. Like, do those things impact valuation as well, or is it strictly just an EBITDA conversation?
I think EBITDA is the core conversation, but to your point, it's almost like a follow the money conversation. How can MSPs follow the money here to the hot markets, right? Well, look at where PE is investing right now. Evergreen Service, and I shouldn't call Evergreen Services Group a PE firm. They're backed by private equity, but they're investing not only in MSPs these days, but in what I would call ERP consulting firms, ERP integrators that do managed services, et cetera. So you see a lot of that. To your point, you guys had just a great successful run focusing on the ServiceNow sector. There are still very high multiples going on there in the IT services market for ServiceNow professionals. You know, I have not seen or heard anything yet about the OpenAI and Anthropic ecosystems. Like, you haven't seen Accenture go out and start buying a bunch of OpenAI partners or Anthropic partners. They're starting to buy AI partners, but it's not as well defined. I would watch Accenture in particular in terms of what they may or may not do in terms of buying AI partners. And that would be your clue as an MSP. That's the AI ecosystem I need to get into, whatever vendor that is.
Great stuff.
Yep. Yep. But I think that's it on my recommendations. Go, Mark, did you have something on that?
Yeah, I mean, I'm kind of, I guess, obviously starting a software company way back in the day at Enable. I mean, I've always been a rule of 40
Right.
type person, is to really look at, if you've got a business that you can grow, right? Like, from a standpoint that, okay, we're looking for double-digit growth. We're looking for, and I'm not talking about by osmosis, by referrals or whatever. Like, you've got a unique selling proposition in the market to go out. And I know at the end, at Enable, or sorry, at Fully Managed, we were adding probably somewhere between 130, somewhere in the neighborhood of 120 to 130,000 a month in recurring revenue, right? In SMB, you know, primarily SMB and mid-market contracts. So for me, it's, you know, we kind of took what we did at Enable and almost applied that same mentality to building a managed service, what we call the managed services platform company.
Right.
So again, did the investments, created like kind of a unique IP, or no, like had unique IP in what, you know, what we did, and obviously a fairly scalable growth model. And then on top of that, we had an M&A engine. So we had a few other pieces from kind of the standard, you know, SMB focused MSP that's out there.
Yep.
I mean, we could definitely talk for an hour on, you know, on that, and because I guess it really depends on who you're looking at to exit. So our exit targets were going to be a public IT services, a public technology company, which obviously TELUS, the acquirer, is a $20 billion global company.
Right.
So what we built is something they figured out, okay, we can use that to plug it in to our machine to make it a, you know, let's face it, a company that size doesn't invest in something to grow it to $50 million. They're growing it to $1 billion plus. So
Right.
I think, and in the case of Enable as well, we really, you know, created a brand, created a unique selling proposition with obviously people like Mike Cullen, out front and center, in that kind of first wave of business transformation in managed services. So I think, yeah, if you're running a standard kind of horizontal focused, even vertical focused SMB managed service provider that's growing, again, single digits or low teens, you definitely have to be able to have the level of EBITDA that you're talking about earlier, for sure.
Yep.
But again, the flip side of that is when you go out, when you're the acquirer, you're talking to a 50-year-old owner of an MSP that's making $500,000 a year personally and leaving whatever else back in the company. It's hard to get them motivated to sell their business for $6, $7, or $8 million when they make $500,000. All they got to do is keep the company for another 5 or 6 years, and they make that an income, right? So that's kind of the catch-22 on that. Like, I'm a big believer that the managed service market, the MSPs are undervalued, but again, I'm not out there buying MSPs anymore. So I mean, it's I think it's whoever's buying at the top end is going to dictate what the valuations are. And like you said, Abe Garver or definitely the Cogent guys. There's a bunch of other guys that do this for a living in terms of what your business has to look like.
Joe, for the sake of time, do you think maybe you can go through this in a minute or so, and then we'll wrap things up? And it's been a great conversation today, so thanks again.
Yeah, no problem. No problem. I can do this in 30 seconds or less. Folks, read this chart and reach out to me in terms of what to do in angel investing. And if I was interested in angel investing but wasn't sure where to start, the first thing I would do is go read a book called Angel: How to Invest in Technology Startups. It's from Jason Calacanis. And I read that, and his thesis made a lot of sense to me. Number one, only risk what you can afford to lose. And number two, you got to think of this as like a mutual fund. You're going to have to spread those angel investment dollars over, 20 some odd companies so that you're spreading the risk. And over those 20 companies, you're going to expect one or two of them to hit big, really big, and make up for your losses. And I think that thesis is exactly right. It's been my experience so far with angel investing. And if anybody has any additional questions about how angel investing works, feel free to reach out to me offline.
That's awesome. We can actually probably do one of these webcasts and just talk about this. Like, I think this would be an amazing topic for people to listen to. I do have a couple of questions for actually both of you guys. There was one question when we talked about trends, and Mark, you talk a lot about this. Is compliance a trend in your mind that's going to impact MSPs?
Yeah, I mean, I think it pains me to look at where the industry is at, kind of 25 years later in terms of, I think we've had the opportunity, frankly, to self-regulate and develop kind of more of a regulatory regime, not that different than if you look at the CPA Association as an example, right? So compliance, I mean, the fact that cyber, there's so much risk that's out there today, people are learning the hard way. And we definitely see, some of the companies that have put together compliance as a service playbooks. Now, a lot of the ones I've seen are more vendor-based ones. I would say you got to gather a lot of information in that area as well to really understand whether you're going to get into the compliance business. You're going to whether it's a vertical focus that you're going to have, and who you're partnering with, and what tools are you're using to achieve that. SOC 2, Type 2, and there's kind of all the general frameworks that are out there. But compliance is definitely a big one for sure.
Okay, great. And then we did have another question. Really, and Joe, you talked about this a little bit quickly, is when we talk about like MSPs, how can they drive energy costs and usage down?
So what you want to do there is, I think you start with your device makers, whether it's your PC suppliers, your network equipment suppliers. If you look at what Cisco is up to, Lenovo, Dell, and the list goes on, HP Enterprise, they're all coming out with what you would call sustainable IT partner programs, which in many cases includes energy management and power management tools and technologies to help measure the consumption of energy across those devices, and then provide that as a dashboard to the end customer and show them how they can lower their costs in terms of energy management. That's one opportunity. Another opportunity, and this gets back to your compliance question, involves something called CSRD, Corporate Sustainability Reporting Directive, CSRD. This is a European compliance mandate. It's going to hit 50,000 European companies that have to report on their energy usage, their environmental impact, et cetera. And at first glance, it's like, well, I'm a US MSP. I don't care about what's going on in Europe. Well, guess what? If you are doing business with any of these companies in Europe, or if you're part of their ecosystem, even if you're a small business, you're going to have to report your data to those companies. So get familiar with CSRD immediately. Your vendors are familiar with it, particularly in Europe, but increasingly that education will come to the US.
Awesome. Thank you. And I don't mean to rush you, but we're at the top of the hour, and Zoom might just cut us off. So I just want to let everybody know that our next webcast that we're going to be doing is with David Weeks. Don't miss that one, because it should be a real good one with his
There he is.
and his worldwide escapades. I'm sure we'll have some great conversations. Joe, thank you very much for today. I appreciate your insight. I value it. It's always so in-depth and well-researched and well-read. So thank you very much for your time. I know you're a busy guy, getting you here today and sharing your stories with all the MSPs and vendors in the industry. And Mark, as always, thank you very much. See you later,
Peace out.
brother.
Well, thank you guys. It was awesome to catch up. Take care.
Enjoy Taylor Swift,
Cheers.
Mark.
Thanks, Joe.
Take
Cheers.
care, man. Bye, everybody.
Bye.